Alibaba stock has crashed 35%. Yes, 35% from its recent peak. So, is this a crisis or an opportunity for all of us? And Alibaba just announced its March quarter results and full accounting year 2021 result as well yesterday. So I read through every single thing and I'm going to summarize the main points to you in this video. And at the end of it, I'll share with you the exact price to buy Alibaba and whether is it a good time to buy right now based on my personal opinion. First of all, the revenue of Alibaba has increased 41% year-on-year basis. Yes, 41% in revenue. Yet, stock price have dropped 35%. It just doesn't make sense, right? Even if we exclude the consolidation of Sun Art, Alibaba's revenue would have grown 32% year-over-year. I mean, Alibaba's business is just so amazing. The annual active consumer on Alibaba's China retail marketplace was 811 million, an increase of 85 million from the past 1 year. This not only shows that Alibaba business is growing, it also shows that the total addressable market of the whole e-commerce industry is growing as well. The pie is definitely growing bigger. It is a good news for all e-commerce businesses. In the past, it was like 3 businesses sharing this small size of cake. But because of the total addressable market is growing, the same 3 businesses are sharing a bigger size of the cake. Do you agree with that? Next, let me share with you my most anticipated business segment of Alibaba, which is Alibaba's cloud computing business. The revenue from this cloud computing has grown from 40 billion Chinese yuan to 60 billion Chinese yuan in just 1 year. It is a 50% year-over-year growth in terms of revenue. Such an amazing result. The growth is mainly due to the revenue from customers in the internet, the public sector, and the finance industries. The reason why I love Alibaba's cloud computing is that the business segment is able to scale. For example, having 100 Alibaba cloud computing employees, Alibaba can generate $100 million. And with the same 100 employees, Alibaba Cloud Computing can also scale up to $200 or even $300 million. And this is the power of being able to scale with the same amount of resources. Basically, it is economies of scale. Currently, the cloud computing segment represents around 8% of Alibaba's group total revenue. And with such a fast growth rate, I foresee that the revenue from Alibaba Cloud Computing will be more than 10% of Alibaba Group total revenue in the coming years. What do you think? Do note that the major difference for this year's financial report is the anti-monopoly fine. And based on the annual financial results, we can see that the revenue of Alibaba has grown 41%. Yet, the income from operations have dropped 2%. This is mainly due to the anti-monopoly fine of $2.8 billion US. Based on March quarter financial results alone, Alibaba had its first ever operating loss since 2012. Net loss for March 2021 quarter is around $1.1 billion US. However, if we actually zoom out and look at a bigger picture alone, you will definitely be amazed by the whole Alibaba business. Although Alibaba is being fined $2.8 billion US, Alibaba still managed to achieve a profit of $21.9 billion US in the full fiscal year of 2021. I clap for them. I have summarized the key pointers of what I observed in Alibaba's latest earnings that you have to know. I understand that you have been waiting for this, so let's discuss the exact price to buy Alibaba stock based on my personal opinion. Based on my growth calculator, we have to plug in both the current earnings per share and earnings per share growth rate. So let's look for it. Because of the $2.8 billion US fine and with the increased number of share issuance in 2021, the earnings per share has decreased from 55.93 Chinese yuan per share to 54.7 Chinese yuan per share, which is equivalent to earnings per share of $8.35 US. Next, let's look for the earnings per share growth rate of Alibaba. Based on 5 years average EPS growth rate, it is around 42% per year. However, based on latest year-over-year growth rate, it is actually negative 2%. I understand that 2021 is a special financial year for Alibaba itself because the revenue is growing at 41%, but the earnings per share dropped 2%. Therefore, to be conservative, I will insert 3 different scenarios for my valuation: conservative, expected, and the bullish scenario. Based on conservative scenario, I estimate the EPS growth rate to be 25% and my entry price will be 208. And based on expected scenario, I estimate the EPS growth rate to be 30% and my entry price is $250. And based on bullish scenario, I estimate the EPS growth to be 40% and my entry price will be $334. The following is my new entry price for Alibaba. So what about you? What is your entry price for Alibaba? Do comment down below to share with me as well so that we can discuss further in the comment section below, yeah? I have spent hours reading into Alibaba's earnings report and I really hope you find this sharing useful. And do click on the like button below so that this video can reach out to more people out there and we can all profit from the stock market together. Do watch this video right now to find out how you can have a 99% winning rate in the stock market. Yes, 99%, and I'll see you there.